Thursday, July 31st, market analysis, Stan Ehrlich. We have a variety of another set of bearish engulfing ER sell signals on the major stock market indexes. 2 days ago, we had the same signal. It wasn't quite as big a price range, but nevertheless, an ER bearish engulfing red sell signal in some indexes. But today, it is more significant because we opened an all-time new historic highs and essentially went south from there. Secondly, it did get all the way back down to unchanged and managed to make it below yesterday's lows, which now makes it a new low in some cases for 5 or 6 days instead of a day or two, which is normal, usual, typical. So this is a larger, more engulfing, bearish engulfing ER sell signal with a fairly weak close. Near the lows, on the close, and did get below yesterday's, sorry to rhyme, lows. So, I have to say what I said 2 days ago, which that signal didn't work because yesterday some of the indexes, especially today, made it higher than Tuesday's high. But again, new features, probably larger volume. I don't normally talk about volume, but it does help. Low volume signals are to be suspect. High volume signals are to be given a little bit more credit, so to speak, for profoundness, importance. On Tuesday, I started talking about the October lows. Boy, am I going to bring up the subject again. Tomorrow is the 1st of August. The market oftentimes tops out in August or September before the October lows. Don't trust what I tell you. Check it out for yourself. Now, these historical highs before the October lows, I think are fairly not well clustered. I mean, like 50% are in August. That would be more profound, but I didn't do the research, and I'm expecting to be something close to that. Nevertheless, this is so indicative of a turning point of the market with these reversals, 2 of them in 3 days. I can't help but talk about it a little bit more. So, we've got a bearish engulfing ER sell signal. It's on this SPY today, again, just like Tuesday. Granted, it didn't work because today's high is higher than Tuesday's, but this is a more profound, bigger reversal, blah, blah, blah. I said it all. Big break, late in the day, little tiny bounce on the close, totally not unexpected. Big deal, a little short covering. Next, another bearish engulfing ER sell signal on the QQQ in 3 days. A low lower than not just a day or two earlier, but several days earlier. And a new low close, I forgot to mention that, for a few days or several days also in these indexes in general. If I was going to give a rating on Tuesday's bearish engulfing signal, I'd give it an 80, 85. It was pretty profound looking. It looked very good. I was expecting exactly what I said I was expecting. Today, I got to give it a rating of 90, maybe a 93, way up there. I haven't seen this for a long time. All I can say, I'm serious. This could be the beginning. My fail-safe stops are above the highs of today. I don't stay short if it starts to make new highs. End of money management. Next, another bearish engulfing NASDAQ futures contract. What can I say? I love it. This looks extremely profound to me. How far down are we going to go? That is something I haven't commented about. The first or second support levels on each individual chart that I've covered already, I definitely expected to be tested, and I would not be a bit surprised if we ended up something in the ballpark of a 50% retracement, maybe, from the lows that we made last April. Now that brings you back to, I'm just eyeballing this real quick, maybe to the support area of 2680. That would not surprise me. Next, natural gas, closes weak. YM, as I've been saying for about 3 days, 4 days now, some people might call us a double top. It could be. we've dropped off pretty quickly every darn day since I mentioned that, and it's not closed on a strong note after making new historic highs, or new highs for many months. It wasn't historic. So this is now one of the lowest closes for the last 2 or 3 weeks. That's significant. And even a little bit lower would be a new low close. And a little bit lower than that is going to be a new low. That's where the big sell stop might be. It'll be a double top downside breakout if we get there and close at or below that level. And that would be about 43,925. Certainly, I would be expecting this support zone to be tested, 43,520-ish down to 42,90, 915. But really, I don't think they're going to. Remember, I'm looking for about 2 months to almost 3 months, between 2 and 3 months, beginning of October, end of October, for a major, significant buying opportunity. Do it for yourself. Look at look at 2 or 3 or maybe 4 months before October each year, and what happened after October, November, December each year. Those approximate 6 months. And you'll see that October sticks out incredibly strongly many, many times. Next. Okay, I got to go faster. Very weak on the close. Russell, coming down close to the support area, but already double topped out and is one of the weakest like the YM. Next. Close, very poor, 1 minute chart. Next. Bond market did slip back down. I can't particularly be amazed about that, or I don't think it's the beginning of anything significant, but it is still holding above the neckline of the little head and shoulder bottom that I've been talking about for about, I don't know, a week or two. Well, at least since I outlined that low, so let's say July 24th. So this little 2 or so week head and shoulder bottom is the shoulder, last shoulder on the bigger head and shoulder bottom, where the head is May 22nd, and the first shoulder on that pattern was April 9th of this year. That's a normal size 3 or 4 month head and shoulder bottom. That neckline, if it's broken, which is predicted by the smaller head and shoulder bottom, and that says it's supposed to go up to 116.20. Well, if that does happen, we're certainly breaking the neckline on the bigger pattern. That bigger pattern is now in force and would predict a move up to 122.21. Next chart. 10-year notes, I expect to follow through with bonds, no particular comment. Crude oil, overbought, dropped off a little bit today. I think it could go down a little bit more than this little support area, which was yesterday's low and today's low almost the same. Probably down to 63-ish. But it's not started really. There's no bearish engulfing. Didn't get a signal, too bad. But I mentioned that, the rally after this gigantic bearish engulfing sell signal would not be surprising, but I didn't expect it to last a little over a month. So there's a good chance that's it. And we're going to go down and make new lows completely below 62.80. Next, we've got another new low in the natural gas. This head and shoulder top is just plain outright working. It's great. Unfortunately, today it got oversold. Had a little bit higher close. Maybe we'll test again. Again. 3.2, which has been a high almost exactly for yesterday, the day before, the day before, the day before, the day before. Pretty good resistance area on a very small, short-term basis. Kind of hard to find those little ones. Nevertheless, looking good. Now, oversold, another bounce. Not for long, not much. Next. Doji, inside day, heating oil, not really too much to say, except I do like the overbought condition on this day, and I do like the fact that it's been going sideways. Now, this bearish engulfing I hoped would work. It didn't. It made a slightly higher high for only one day, but it is not really going down either. Neutral to bearish, put it that way. Next, gold. Almost made new lows for a couple of months yesterday, but bounced back a little bit today. Doji doesn't mean much. Doji's basically indecision. No higher high, no lower low than the previous day. But we have been dropping a lot after bearish engulfing sell signal on July 23rd. Yay. Next. Silver. Almost testing support. Maybe it still will. I wouldn't be surprised to still see it come down to 35.5. But oversold means it could bounce at any time. At this point, you know, if we did get a little bit lower, that'd be nice. But this low could serve. What happens if we rallied up, went sideways for a couple of weeks like over here? You would build another last shoulder high. As long as it didn't go up too much, it lasted 3 to 4 weeks into about here. So there's some symmetry. I'm going to guess something like that, price-wise and so on. Then I'll be screaming bloody murder, head and shoulder top. But this is way too early. I'm not going to be right. This is way too early. Next, platinum, way oversold. Huge break yesterday. I think it could still come down some more. I know it's oversold and it could bounce out at any time, but this is dropping pretty quickly. So I'm looking for 1251. Next, copper. Wow. What an incredible outside down day in copper yesterday. Remember, we do get short. Once the market gets, it's overbought. Okay, that's good. And then once it gets higher than yesterday's high, which was on Tuesday, then gets lower than Monday's low, you have a bearish engulfing at that moment. That's where we start to get short. ER1 scalping overnight. So the close is here. The close is there. And it did get all the way down to there. So you would expect there's a high degree of likelihood that there would have been a great scalp trade. I can't tell you how great that scalp trade could have been, would have been, should have been yesterday. We got the higher high first, popped up. Then at the moment it got below about 5.54, we got short. The automatic trading system, ER1 scalp, and ER1 overnight. So that would be holding on to it, and it went lower again today. Unbelievable. I don't think I've ever seen in my 53 years in this business copper move quite that large a range, percentage, etc. This could be an all-time breaker yesterday. Next, soybeans, grains, new low, close, oversold. I expect to bounce any time. It did bounce off of or close at a little bit of support. Nothing super major important about that. We'll see what happens. I'm still bearish. I think the rallies are going to stop up here at resistance and then turn down again. The grain markets are not doing very well, and that puts my soybean oil, this chart, in jeopardy. We did get up to resistance Tuesday, Wednesday, and therefore overbought conditions in resistance. We did turn down today. No surprise. Talked about it yesterday. And it looks like we probably could be working a bit lower. I don't see any support on any bull moves in any other grains to speak of coming up in a moment. So I have to think it's possible to get back down to the support level at 52.17. Next chart. New low, a little bounce on the close, oversold conditions. Maybe we're going to bounce up to what? Just 269? Okay, be a little generous. How about up to 281? I really don't think it's going to be coming all the way back up to this resistance of 298 at this point. I don't see any kind of bottom building yet. Next. Corn. I got to tell you, it was an outside up day. That's very nice. But we've been seeing periodically and constantly, basically, new lows to the trend for months. I didn't get oversold on this particular move down. I realize there's some divergence here, new low in price, but not in the indicator. But I didn't get anything but a bullish engulfing, so I can expect a little bit of a rally. That's about it. Oh, there's a gap to close up here. There we go. 417. Next. Wheat. New low. I think it closed about unchanged. Don't see any reversals. Yes, it got oversold, so we're talking a little bit oversold for some of the grains. Some of the grains could bounce as a little bit of a group. No major bottoms yet. Next, the stocks. Shell came down again to yesterday's lows, which had closed a gap very accurately to the almost exact cent. That's a tick. Today, we have an outside up day. Normally, I would say that's bullish, but remember, it closed the gap, created only yesterday as it gapped down. That's perfect. And went up a little bit more than that. That's okay. That's acceptable. And closed, boom, down at the bottom of the gap. I think this might start falling apart. Next, we're getting a little bit lower. Apple, no surprise. The markets did close a little bit lower overall. Resistance level did stop it very handily and very accurately a week or two ago. Next, we're coming close to a downside breakout of this pennant formation in Tesla. So I'm watching for that. Okay, if we do break out to the downside, we're going to be closing below this bullish trend line across the bottom, and probably the same day closing below 290.80 also. Now, maybe it'll hold at the lows that we had in early June. But I do think they're going to get broken if we do break out down bearishly. This line I don't think is all that big a deal, the support line. Okay, I think I'm going to turn bearish here, but I don't have all the reasons I want. I need a breakout, new low closes, and we're back to the E-mini. I'm sorry, this is NVIDIA. We have a major bearish engulfing ER sell signal, and you don't get a lot of them. The last time we had a signal like that, a whopper was on the low of the move in April 7th. Turned out to be a whopping important long-term low. It's been going up and up and up pretty steadily since that date, April 7th. April, May, June, July, 3 months. Maybe a week less. Now, a profound sell signal. I have to say, I think it's going to come down probably to 153. That's my first downside objective. That gap is closed. There's no reason for it to be paying attention to it at all. And maybe even lower. Okay, you guys have a great trading day and profitable trading to you.